Okay, guys, so today we have another special episode with another special person. His name is Mike Vann. He's been investing in real estate for almost 20 years throughout Arkansas and Missouri and has built a $6+ million personal portfolio across multiple asset classes, consisting of single family, small multifamily, apartments, and commercial properties. Growing up in a family construction business has given him extensive experience in both doing the work and in project management. Mike shifted his focus from solo investing to apartment syndication in 2017 and has since been involved in as a general partner in acquiring almost 1,000 units in Arkansas, Oklahoma, and Texas, with total purchase volume in excess of $50 million. So welcome to this show, Mike. It's a pleasure having you today.
Thank you, Martinez. Pleasure to be here.
It's a long bio, guys. I hope.
Sorry.
Yeah, it's a long bio, but it's definitely worth reading. I mean, it's a very impressive. I told you that before the interview. I was like, whoa, like we connected on a social media. That's how the things work in this day and age. Like it was like, oh, let's make this happen. So this is going to be a quite quick interview for you guys. But as you've seen from the bio, there's a lot of great, valuable, information going to be coming on from this man with this much experience in real estate space. So again, a pleasure, and thank you for being here.
Yes, sir. My pleasure.
Again, first of all, I didn't see your bio until like an hour ago, and I put this question first, so I'm just going to frame it a little bit different because the question was actually, how did you discover real estate investing? But I saw that you grew up in a family where actually you've been involved into construction business. So maybe you can tell the story of how did you learn, what did you learn, and how did you end up being in real estate after all?
Yeah, so my family owned a construction business. They did mostly residential remodels and commercial remodels, things like that. So I grew up doing all the grunt work, digging the ditches, cleaning up the job sites, all that kind of stuff. And as I got older, learned more some of the specific trades, not too in depth because I ended up going to college and pursuing a business degree. But as I got into the corporate world in medical sales, went through a couple of layoffs. I made it through the layoffs without losing my job, but realized at that point that you need to have a backup plan. And I knew real estate was a good, solid investment. You always see all the late night infomercials on, the guys with the fancy cars and the beach houses and all that kind of stuff. So I'm like, hey, I'll give this a shot, and dug in and started educating myself. And like a lot of people do, started small with a duplex and some single family homes and did some flips and some lease purchase deals, and finally started, scaling up and getting some fiveplexes, 12, 27, ended up selling a 16 unit, 1031, exchanged that into a 55 unit apartment complex. And then before that was all as a solo investor while having a full-time job, and still have a full-time job, but decided that syndication was the route to take to scale beyond the efforts of myself and be able to reach my financial goals, to be able to leave corporate America someday. The blessing and curse is it's a great job, but it is just a job. It's given me a great income for my family, but to replace that income takes a lot as well. So syndication was going to be the quickest route to get me there. Not that anything's quick in this game, but I see the quickest route on a 5-year plan to get me out of corporate America and into doing this full-time with my partners who are currently full-time. Yeah.
Okay. Got it. So great story. So actually, because I didn't know that you still have a full-time job. So that kind of transitions well to the second question, which is how can someone invest in real estate if they have a full-time job? Any advice, on that question?
Yeah, well, you hear a lot of people talking about getting into real estate with, you don't need any money, you don't need any experience. Well, that's not true. Somebody needs to have money, somebody needs to have experience. And I suggest if you're going to do it, that you at least educate yourself and save as much money as you can through your full-time job, and then find strategic partnerships, people with more experience, more money, and partner and learn from them, and add value to them So you bring that to the partnership in order to get started. But yeah, I just saved and invested along the way, slowly and surely built and educated myself, and then the assets got bigger as time went on.
Yeah,
But
yeah.
I couldn't do it without a third-party property management company. That's my first couple properties I decided to manage myself. Quickly realized that I'm not cut out for property management. Not only from I don't have the time, but also I guess my heart is too big. I listen to a lot of the sob stories and end up believing them and all that. And so I decided that if you outsource that and just focus on the business itself, let the property management professionals do what they do best, and I do what I do best.
Yeah, yeah, definitely. I like what you just said about adding value, because a lot of people actually, there's a lot of people saying like syndication space is saturated. I mean, there's a lot of people going into the syndication space now. It's kind of became a popular thing. I don't know in the
Mhm.
States, like, because again, in Europe, we have business syndications, but not real estate. I mean, it's not that popular as in the States though. But what you mentioned is like add value to other people before you probably add value to the property, because you will never add value to the property if you're never going to add value,
Right.
to other people and build those quality relationships. So I think, so again, what will be that one piece of advice for a person, again, because you mentioned all these, things, the property management. So what would be one piece of advice for somebody who's just looking at this interview and thinking like, oh my God, like, Mike is so special. He has all these like 20 years experience, all these like 1,000 units under management. They're like, whoa, good for him. And he's doing like having all these relationships already.
Sure.
But I'm just looking to start. So like, what will be the first stepping stone for that person to go in the marketplace and get started?
So the first thing I would do is, this is a relationship business. And so if you're wanting to start out in syndication, the first thing you need to do is create relationships with brokers and investors. You have to have deals and money. And so just look at the markets you want to invest in, find the top brokers in those markets, and start reaching out and contacting them. Before you do that, you need to be educated. So when you do finally get to talk to a broker, you can speak their language, know how to use the terminology, what it means, and be able to relate to them to create that relationship. You're gonna get some deals sent to you eventually, maybe even right off the bat, but most likely the deals you get initially won't be great deals. But always respond with a follow-up call or email rather. Analyze the deal, send them back your feedback on why it doesn't work for you if it doesn't, and give him specific criteria of what you're looking for. That way you can, as you're building that relationship, hone the criteria so he can feed you deals that are more specific to what you need, what you're looking for. And also too, it may just be a test that he sends you something to see how you're going to respond.
Mm-hmm.
So by analyzing the deal, giving him feedback, it lets him know you're serious and know what you're talking about, and also furthers that relationship.
Okay. Yeah, definitely. What I heard just now is basically what you mentioned, staying specific to your criteria, because again, now probably the deal flow, like there's less and less of deals available in the market. Like, I don't know about like your market specifically, because again, like I'm not from States, but like I do study US market a lot. And like, I know a few things, what's going on there, like, because you're investing across multiple states, that Kansas, Oklahoma, and Texas.
Mm-hmm.
So all of these are great markets. But, can we just touch, like this point when you say like staying specific to your criteria?
Right.
Because what will happen if if new person is coming in and kind of saying, because I know, like, I see what's going on in the Facebook, like groups where people say like, last year I didn't get any deals. Like I didn't put any deals on a contract
Mm-hmm.
because they stayed specific to the criteria. So what that means basically, and maybe you can confirm that you have to stay specific to your criteria. You cannot downsize and say, oh, maybe I should go and pursue this because there is no good deal. So maybe I should just grab this instead of staying to my criteria.
Right. So you have to make sure that you're not so hungry for for a deal that you take any deal, and
Yeah.
you have to have specific conservative underwriting criteria that you stick to, and don't try and stretch that because what's going to become at risk is your investors and your credibility.
Yeah.
If you stretch your criteria to make the deal work and you get into the deal and unknowns happen, which they always do, you have to, if you don't have conservative underwriting going into it, then you're looking at getting in some serious trouble and potentially losing the money of yourself and your investors. And that's the quickest way to have a short career in this business.
Yeah. Yeah. Once you like, I think Warren Buffett says, like to build reputation, like relationship trust, it takes years, but to break it takes 5 minutes, 5 seconds.
Mm-hmm.
I don't know, but it
Yeah.
takes, yeah.
The number one rule of investing is don't lose money. Number
Yeah.
two rule of investing is see rule one.
Yeah. Yeah. I love the quote, that one too. Yeah. So
Yeah.
what about investing with no money? Cause I remember I saw these books around in real estate space. They're like, buy real estate, no money down, like no money down. Everybody's talking no money down. So, having all this experience, maybe you can tell people, is it even possible to invest into real estate with no money?
So if you're looking at doing, smaller deals, single family homes, duplexes, some smaller, multifamily, and that's possible because you're looking at really owner financing is what you're looking at. But if even in an owner finance deal, if they are truly going to require you to have no money down, you're probably going to be at their mercy on the terms, which means they could charge you a higher interest rate, give you less favorable terms, and because you don't have any power with no money, you're at a disadvantage. So it's possible to get into real estate with no money, but not likely, and also you'll be at a disadvantage. If you're looking at syndications, for example, I know as a passive investor that I would not want to invest in your deal unless you had your own money at stake. Because if it's just like a chef. If he won't eat his own cooking, why would you want to eat it?
Yeah, makes sense. Definitely makes sense. So what about you're talking about, again, investing with people who are investing in their own deals, and I just want to transition to one point because that's kind of in my head, it connects, but about mentorships, because again, that's very important. Like in this day and age, I think there is so much information for people. It's available out there, like the books, seminars, meetups, and people talking about mentorships. Again, there's being a lot of people coming into this space, saying like, oh, listen, I have all these assets under management and I do the mentorship. So, should somebody like, let's say me, who is new in this, space, should consider like getting a mentor?
I think mentors are great. I had one in the multifamily space. I was self-taught as far as real estate investing up until the point that I decided to get into syndication. At that point, whenever I was going to be taking other people's money, I take it seriously enough with my own money, but if I'm going to invest and be a steward of someone else's hard-earned resources, then I wanted to make sure that I was going to have the highest likelihood to succeed. And so doing that, I looked at several mentorship groups and joined one, Brad Sumrock's group out of Dallas. It's a great way to not only get the education, but also networking with potential partners, which I've met my partners there. I met the partners that I did several other deals with through that program. But whether it's a paid mentorship or not, just going to these different meetings and getting around, networking with people who are doing what you want to do, who are in the position where you want to be someday, you can learn an immense amount from those people. And also, aligning with them and, offering your services to be boots on the ground or to do underwriting for them or walk units for them or doing anything you can to provide them value for them to bring you in, behind the curtain, so to speak, so you can see how the inner workings of these things happen. And there's a lot of moving pieces. I mean, investing on my own, I thought that I knew a lot. There is so much more to learn on the syndication side, from SEC compliance, just all the different lending options. There's a lot of moving pieces, and it is amazing how much there is to learn once you get in there, even though I've been doing it 15 years on my own.
Yeah, yeah. I mean, the rules, like when it comes to SEC, like the rules probably change. Like I don't know. I don't know. Again, I'm not from state, but it changes quite
Right.
often, so we have to keep up to date with what's going on. I mean,
Mm-hmm.
real estate. Yeah, every business is changing now. I mean, the technology is here, and all the rules, regulations. Who's in a government. Yeah. So again, coming back to the mentorship. Okay, so let's say I'm a brand new person. That sounds great. Again, Brad Sumrock. I know those people that you mentioned. So, it sounds great. But maybe I don't have a 10K whatever
Mm-hmm.
available. For that mentorship, which is great, and we'll be exposed to all these people that I can again add value to and learn from them. But if I don't have a 10K and maybe I have a $10 in my pocket, what three
Sure.
books would you recommend for me to first grab, maybe business or real estate?
Rich Dad Poor Dad, of course. That's a great book as far as changing the mindset around money, how it works, and how it can work for you. Um, there are just a ton of books out there. Napoleon Hill, Think and Grow Rich, is a classic. Um, and gosh, there's so many to mention, but those are probably the top first two I would read probably.
Any real estate books what you're reading now? Any real estate books that you would recommend?
Actually, right now I am reading Generation Z Unfiltered. It's how the mindset of Generation Z and how to relate to them in the workplace. And because I'm a Gen Xer, so I'm two generations back. So it's a really interesting book. It's not necessarily a real estate book, but it's just a more human psychology book. Um,
Yeah,
and
yeah,
so learning how to relate to people across all different generations is very important.
definitely do agree with that. Yes. uh Again, talking about mentorships, investing in yourself, books. Another thing you mentioned, like through all these years, 20 years plus now in the real estate, you mentioned you kind of did a lot by yourself. So again, coming back to the point, somebody's watching and thinking, okay, so I can get a $10, I have that in my pocket, so
Sure.
these three books I can buy. So and maybe I can find some people that could be part of these deals. So what do you recommend for people starting out? Should they go by themselves first, or should they go and look for partners?
No, so back in the mentorship part, I mean, if you're right. Not everybody's going to have thousands of dollars to give to a mentor, and but through social media and all these different Facebook groups and there are so many ways you can connect for free, and reach out to people and start conversations, and you know through those conversations find ways to add value to them, and then grow those relationships, and over time you will find a mentor, someone that happens naturally, through the fact that you're adding value to their business. I mean, by doing that right there, you're going to learn from them. And, so you don't have to have thousands of dollars to get a mentor. You can do it through the power of social media very easily nowadays. And you can do that across multiple platforms and multiple people all at once for free. So, sorry, I wanted to get back to that for a second. But as far as alone or by yourself, this is a team sport, especially syndication. Real estate's a team sport, even if you're not doing syndication, but much more so if you are doing syndication. The fact that there are so many moving parts, like I spoke about earlier, having partners. I've got two partners, Carl Silvercrop and Rodney Miller, and we each take on different roles. Some overlap as we go through these deals, but the power of partnerships is very necessary, not only on the general partnership side, but also your team, as far as your property management team, your legal team, your lending team, all those things, very important. So it can be done alone, but it will be much harder and take a lot longer to do it by yourself.
Yeah, yeah. And I don't think that's the path that somebody would like to take, especially with the position that the market is in, and who knows what's going to happen.
Right.
Everybody's predicting for a world to end, which is not going to happen. But you want to partner with the right people at the right time and
Sure.
just, make things faster, move faster. Speed is
Absolutely.
power in this day and age.
Right.
So, talking about investments, 20 years experience. So maybe you can talk about, again, maybe not the nasty, but the worst and the best, investments, either real estate or business. Would you like to share with people?
There's if people tell you they've never lost money in real estate, either they're extremely lucky or maybe have only done one or two deals. And I've lost a little money. Like probably $1,000 on my first flip. My second flip, I only made a couple $1,000s instead of making 15,000 like I had anticipated. So there's a learning process there, but I have never lost anyone else's money, and that's why if before I ever started taking on partnerships or much less syndication, I wanted to make sure I put myself in the best position through experience to make sure that would never happen.
Yeah, definitely. Yeah, what you mentioned. Yeah, if you just make sure that, again, you surround, because to lower the risk, to mitigate the risk, if you just surround yourself with the right partners, you get the right information, and again, the 20 years experience definitely helps as well.
Yeah.
So
yeah, I've had some deals that, like I said, those first couple flips that I did weren't so great, but then I've had other deals. I bought this 16-unit bank-owned property for $450,000 and turned around a few years later, sold it for $785,000. That was one of my bigger solo successes.
What year was that?
That was in 2010. I bought that.
Okay.
And then sold it in 2017 and did a 1031 exchange into the 55-unit apartment complex that I bought.
Wow. Great timing.
I bought that for just under 1.5, and it'll be close. It'll be valued close to 2 now. So in just under 2 years, or just a little over 2 years rather.
Yeah. Wow. That's awesome. That's impressive. So that's just to show you guys what happens when you put in action and you just do stuff and you of course there will be losses, because what you just said, what Mike said, that, if nobody lost money in a deal, that means they don't do any deals. They just talk about, oh, I'm a Instagram star. I'm a real estate investor on Instagram and, LinkedIn. And this man is, is putting, stuff out there on the line. He's, 20 years in experience, in real estate space, having 1,000 units under management currently. So talking about 1,000 units under management, 2020, first of all, love the number. Maybe, it's going to be magical. I hope it's going to be magical for you, Mike, as well this year. So what's the goal for 2020?
Well, our goal is to do 3 to 4 deals this year. We just closed one in November of last year. We're getting that up and running. It was an $8 million purchase. We're putting in a little over $2 million in CapEx. So it's a big deal. So we're spending the first couple months of 2020 getting that well underway. While we're looking for other deals, our target is to close our first deal in 2020 by April. So we're actively looking still, but at the same time, we're completely focused on implementing our business plan on this currently recently closed asset. But yeah, we're hoping to close at least 500 to 1,000 units in 2020.
Wow. Well, I'm sure that's going to happen because, from the bio that I saw, it looks like you have some really good partners that are working together with you. So, it's, and you have the experience,
gaining momentum.
Yeah, exactly. So, we spoke about before, the interview, you just mentioned one thing, but again, that wasn't a question. So, what are your greatest real estate marketing tools that you're using currently for your business?
Well, we do have our website, tridentmultifamily.com. We do have a Facebook and LinkedIn pages that we're trying to optimize and figure out how to to make the best use of social media, because we do believe that is a key as far as getting your brand out there, building your online following, you know, creating that thought leadership platform. That along with going to various conferences, real estate and other, to basically put yourself where the people are that you want to learn from and that you want to get on board as investors.
Awesome. Awesome. Love it. So again, coming back to the social media and the current platforms that you have. So what will be the best platforms for people to connect with you, and if they have more in-depth questions?
You could go to our website, tridentmultifamily.com, email us at info@tridentmultifamily.com, or you can visit us on Facebook or LinkedIn, the Trident Multifamily Facebook and LinkedIn pages.
Here you go, guys. Plain and simple. You're going to find all the links down below, so you can go and check it out, Mike's company, and get in contact with him. Again, as you heard, you know, he has a lot of exciting stuff coming up, and maybe, you know, everybody's like, I know so many people that are actually talking about like, man, I have this, you know, high paying job. I'm earning whatever, you know, maybe it's not a high paying job to somebody who's earning $1 million a year, but let's say, you know, somebody has 150K a job a year, and he's thinking like, oh my God, you know, like I have so many things going on, and, you know, I'm looking to get that passive income, because now I'm aware, like on social media, all these like real estate, and, you know, there's so many people coming up and talking about that passive income. So if you're looking to get some of that, you know, passive income, some of the cash flow, I think Mike will be a perfect guy for you to get in contact, and so feel free to reach out to him. And again, guys, if you enjoyed the video, if you enjoyed the interview, you know, let us know in the comments down below. Share it, like it, subscribe it to the channel, and I'm going to see you in the next episode. Thanks, guys.